This is a demonstration of problem 343B using the worksheet to record adjusting journal entries. Galaxy Theater Production Company's partially completed worksheet as of December 31st, 2018 is shown, and adjustment data is given at December 31st. The requirements state to complete the worksheet using letters A through E to label the 5 adjustments and then journalize the adjusting entries. So we're going to complete the worksheet through the adjusted trial balance. And our first information in A states that as of December 31st, Galaxy had performed $900 of service revenue but has not yet billed customers. So that means that we need to debit accounts receivable and credit service revenue for $900 to accrue that revenue. On B, it states at the end of the month, Galaxy had $500 of office supplies remaining. So we see that we had a balance in our unadjusted trial balance of $1,500. We need to end up with $500. So that means we need to make a $1,000 credit adjustment to office supplies, and our debit will be to supplies expense for the same amount. And we'll label that B. C states that prepaid insurance of $600 remained. We see in our unadjusted trial balance we have a $900 balance in prepaid insurance. So if we need $600 to remain, that means we need to make a credit entry to prepaid insurance of $900. And then our debit will be to prepaid insurance for the same amount. The next entry states that we had depreciation expense of $4,200. So we're going to debit depreciation expense for $4,200, and we're going to credit accumulated depreciation equipment for $4,200. The E says that we accrued salaries expense of $150 that hasn't been paid yet. So we're going to debit salaries expense for $150. And since we haven't paid it, we're going to credit salaries payable for $150. Okay, so that has completed the adjusting entries column, and we need to make sure that these debits and credits equal, which they do. And now we're going to complete the adjusted trial balance columns. Remember, when you're looking at the adjusted trial balance, you're going to be going from the unadjusted through these adjusting entries to get to the balance. So if you have a $3,600 balance in cash and you've made no adjusting entries, all you have to do is bring the $3,600 balance over, and that's it. Now, if you have $5,700 in accounts receivable and you made a $900 debit adjustment, that means you need to add those two together because they're both debits, and that's going to give you a $6,600 balance in accounts receivable. Now, office supplies had a $1,500 balance, but remember we adjusted it for $1,000 because the problem said that we had $500 of office supplies remaining. So we do have the correct balance. Prepaid insurance stated we had $900 balance to start with. We made the $300 credit entry, so we would end up with the $600 that the problem said was remaining. Equipment had no adjusting entry, so we're just going to record that $23,000 debit. Accumulated depreciation equipment had an $8,500 credit balance, and then we made an adjusting entry for $4,200, so our total then is going to be $12,700 when we add those two amounts together. Accounts payable had no adjusting entry, so it'll still have a $4,600 credit balance. Salaries payable had no balance to start with, so the balance is just going to be the amount of the adjusting entry, which was a $150 credit. Common stock had no adjusting entry, so we'll bring over that $9,900. Dividends had no adjusting entry, so we'll make that $26,000 debit. And then service revenue had a $72,000 credit balance, and we made a $900 adjusting entry, so that was also a credit, so the total would be $72,900. Then our depreciation expense, we had no balance to start with, but we made a $4,200 debit. Supplies expense, no balance to start with, but we made a $1,000 debit. Utilities expense had a $4,300 balance, but we made no adjustment, so we bring it over as is. Salaries expense had a $30,000 balance, and we made a $150 adjustment, so our total would be $30,150. And then insurance expense was a $300 debit, so we're going to have a $300 debit balance in the adjusted trial balance for it. And so we can see now that our debits and our credits in the adjusted trial balance do equal. And that's what we want to see, because we're going to be using this information later on to do the financial statements. So that's part of the process. Now, even though we did the worksheet and we've got these balances, remember that that is just a tool that we use. So we have to still make the adjusting entries in the journal, and those will have to be posted to the general ledger. So we're going into the journal now, and we're going to make the same entries that we made in the adjustment column. So our first one was where we recorded the accounts receivable and the service revenue. So we're going to debit accounts receivable for $900, and we're going to credit service revenue for $900. And our explanation would just be to accrue service revenue. Our next entry was the one where we did the office supplies, and we debited supplies expense for $1,000, and we credited office supplies for $1,000. And our explanation for that would just be to record office supplies used. The next entry was where we recorded the insurance expense. So we debited insurance expense for $300, and we credited prepaid insurance for the same amount. And we can just make an explanation of to record insurance expense. The next entry was the depreciation expense. So we had debited depreciation expense, and that was for equipment, and that was $4,200, and then we credited accumulated depreciation equipment for $4,200. And our explanation for that would just be to record depreciation expense. And then our last entry was for the salaries expense. So we had debited salaries expense for $150, and we credited salaries payable for that same amount. And our explanation would be just to accrue salaries expense. And that is the conclusion of the demonstration on problem P343B.